Hey everybody, it's Wayne here to give you a week 4 portfolio update for 2023. Admittedly, I'm one day behind, so I hope everybody's having a fantastic weekend. And guys, truth be told, the reason I did not make this video on Friday was because it just was not a good day. I absolutely got punched in my gut, kicked in my teeth when it comes to how the week finished off with selling options. But you guys know that this page thrives on transparency, so I'm going to break everything down for you. But let's go ahead and jump into how the portfolios finished for the week. We'll talk about dividends. And then, guys, we're going to go ahead and jump into the tough week that I had selling covered calls. So let's go ahead and take a look at the M1 portfolio. And one of the things that I want to point out, and you guys will have to put it in the comments if you guys are also seeing the same. And I think it has to do with the fact that I transferred all of those stocks earlier in the month over for my Robinhood. Take a look here, guys. I am currently on the all selection of the value over time chart. And it says right here, my portfolio, which is just over 119,000, it says that my gain is nearly $3,100 for a return of 17.29%. That just math does not add up. And so I don't know if it's because of the stocks, if it hasn't bounced out over a month. But if we go to the holdings, this reflects a more accurate position that I'm currently at. And you can see here, guys, I've got a total of 51 funded positions. This is my cost basis. This is my value. And so there, I think, is the more correct unrealized gain. Now, it does seem to display correctly when I break it down from 1 month, 1 week, and 1 day. So let's go ahead and take a look at how my M1 finished for the week. Again, holding just over 119,000. Guys, a pretty good week in the M1 portfolio overall. I saw a gain of just over 1%, which equates to just under $1,400. We saw some dividends come in this week, so we'll get to that as well. And if we break it down, you guys know that my long-term hold slice is my current focus, and it has the bulk of the target percentage at 80%, followed by this slice, which is quarterly dividends, my ETF slice, and monthly dividends that hold 5% allocations apiece. And you guys obviously know from previous videos, I transferred over quite a few monthly payers from my Robinhood. So that's why you guys see that this slice is so overweight. There is a method, if you will, to my madness. I hope that these monthly payers are going to help fund this long-term hold slice, which is currently very underweight, so not even 20%. So that makes sense, right? Out of my buys, the majority of my $150 per week is going to go to that long-term slice. So that's the week view. Let's go ahead and pull out to a month. And again, guys, not really, I mean, not bad at all, right? Pretty solid. I think 2023, at least January, has seen a pretty surprising rally. And that also factors in as to why, guys, I'm not doing good, at least for this week when it comes to selling covered calls. So for the month in my M1 portfolio, I'm up just about 3.5%. That's a total gain of 3,100. Again, if we go back to the total amount of holdings, 51 positions, not too bad, guys. And if we actually look at, let's go ahead and sort this by unrealized gain. Again, out of the 51 stocks, I know it doesn't give me a count here, so I did that in my notes, but just 22 out of my total 51 holdings, I'm in the red. And some of these guys, I'm not down by a whole lot. My biggest quote unquote loser, if you will, is going to be Aries, Kroger. This is a monthly pair, which is Horizon Technologies. CEQP is also down. Hercules Capital is also down. And then OCSL, guys, we saw some news this week. Kind of interesting. I'm going to be following this. They did a 3-to-1 reverse split. And if you guys know anything about splits, typically if you see a reverse split, that is not good news. So I'm going to be watching this. I don't really have any immediate concerns, though it hasn't, spelled out directly that the dividend is not going to be affected. So I am going to be watching this. And guys, as always, make sure if you see something in my portfolio, it works for me with my current status and long-term goals, make sure that before you add any stocks to your portfolio, it works for you, for your short and long-term goals. So that's how it looks for the week in the M1. Let's go ahead and take a look at buys, and I'm going to go ahead and open these up in new tabs. As a friendly reminder, I contribute $150 per week. I spread that out, $50 on Monday, Wednesday, and Friday. The method behind that is I do expect a steady flow of dividends to start coming in. So rather than those dividends, waiting in queue for the entire week, I'd rather those dividends get immediately deployed or distributed back to primarily what's going to be my long-term hold slide. So let's go ahead and take a look at this, guys. And I'm excited because my most recent purchase on Friday, finally, guys, we're seeing more stocks included on that daily buy. I think last week, even the week before, we saw the same 6 stocks every single time. And for me, it's been quite boring. I'm going to be honest, guys. I think dividend investing, everybody should know, there's nothing fast about it. There's nothing sensational about it. You have to be patient and you have to stick to your plan. I've been doing so, but admittedly, guys, it's been a little bit boring. Well, take a look at this, guys. This time around on Friday, we had a dividend that was included amongst the $50 Friday buy-in, and we saw a few more stocks included. And I can tell you right now, Texas Roadhouse finally made the cut. Walmart finally made the cut. So these are all from my long-term hold slice, and I'm glad that these are being funded. Same thing this past Wednesday, $50. Now, one thing I finally figured out, and I never seen this, guys. Take a look here where it says buys 7, 1 excluded. I think what M1 does is if less than $1 is left over, it will not purchase anything as far as a fractional share for less than $1. So that's something I didn't realize, and I kept seeing this in previous videos. Like, why is 1 or 2 pennies not being obviously included amongst the purchase? And I think this is the reason. So I need to do some follow-up. You'll have to also tell me if you're seeing this in your daily or weekly buys. But again, this past Wednesday, a total of 7 buys. You guys have seen these usual suspects: Visa, Lowe's, Johnson & Johnson, Union Pacific, the Southern Company, ExxonMobil. Again, I'm glad that we're finally seeing more than just the usual 6. Here we go back to the first buy of the 4th week of January. And again, we've got a total of 7 buys. And again, these usual suspects, as I'll call them, these will probably be something you see for the next 2 months or so. But let's go back here to the main portfolio. And if we look at what's in my long-term hold slice, let's go ahead and sort this by value. It of course makes sense, right, as to why these stocks are being funded first. Even though I have a target allocation of 5%, a lot of these are nowhere near that 5%. But the fact of the matter that other stocks in this long-term hold slice are being funded, it makes me happy. It is going to get, take some time. I mean, look at like AVGO. I don't even have close to owning 1 share. But guys, it'll slowly get there. And hopefully you guys are staying consistent with your investing goals, whether you're a long-term investor, you're focusing on ETFs, maybe dividends as your jam as well. I'm kind of doing all of it, right? I think for me as an investor, I don't think, one path suits me. As you guys know, I want to build out generational wealth by focusing on multiple streams of income and dividend investing, long-term growth. It's just a few of the paths that I hope to get there. So there we have it. Let's go ahead and look over at the Robinhood brokerage. You guys can see here I've got 394K. I also want to point out, guys, in the spirit of full transparency, even though I'm holding 394,000, that's not all brokerage. There is some cash in my Robinhood account, about 50,000 plus. And the reason I hold that much cash is because you guys know I'm selling cash secured puts. So you have to have that capital. And this week, guys, I actually made a lot more cash secured puts than I've done in the last month or so. So we'll talk about those as well. Again, if we look at the week, guys, a fantastic week for the market, right? I mean, kudos to you, kudos to all of us, because you guys, if you are investing in similar stocks or you're focusing in on quality, not necessarily quantity, hopefully you guys saw these gains as well with this pretty, remarkable rally these last few weeks. So again, currently sitting at just over 394K for the week. I finished up just a hair under 3%. So that's an 11,000 plus increase. If we pull back and look at the month, things are looking even better. Nearly a 10% jump in my Robinhood brokerage, that's an amount of 35,000. So you guys would think, right, man, this is great, right? Like, what could Wayne have to complain about? And I'm not complaining, right? But you guys know that I'm doing more than just long-term growth and dividends. I'm also doing the covered calls to generate that cash income. And that's where things go astray for me. Before we do that, though, let's go ahead and look at the dividends that I earned. Kind of a slower week, and from a lot of the content creators I follow on YouTube, it seems to be, we kind of invest in similar stocks. So I've noticed that everybody across the board, and probably who you're following as well, they didn't have a lot of dividend activity. But let's go ahead and take a look at January as a whole. I'm going to go ahead and toggle over to my M1, and let's go ahead and focus on just dividends received. And if we're looking at the fourth week of 2023, I think we only saw 2 dividends in the M1 portfolio. First one being for $3.80 from Cisco. I just purchased Cisco, if I'm not mistaken, in late 2022. And guys, not to complain about M1, because I do love a lot of things about M1, but there are a few things that I don't like. And one of the things that I don't like about M1 is when you click on the dividend info, it doesn't actually break down, right, like what this value represents, how many stocks, right? So, I mean, of course I can do the math, but I like Robinhood because Robinhood will actually say, and we'll go to Robinhood real quick, it'll actually say like, hey, Wayne, on the 27th of January, you received $14.51 from SPHD. And if I click on that transaction, it breaks down, right, the math. Like, this is the number of shares that you held at X dividend date. This was the amount per share, and this is the total amount. So I don't like that in M1, it just gives me the dividend amount. I don't know, guys. Is that like a big deal to you? Is it a big deal to only me? Throw it down in the comments. It kind of drives me crazy that it doesn't just display that information. So same thing with SPHD. This is a monthly payer, guys, that I actually hold both in my Robinhood as well as my M1. So not a whole lot of action on the dividend front for the week. Now for the month, guys, I'm doing pretty fantastic. Let's go back to the cell phone view of dividends received in Robinhood. Remember, guys, I have dividend stocks in both. Admittedly, though, a lot of my holdings I pushed over from Robinhood to M1, and I'm really going to only be using Robinhood to sell options in 2023. And in fact, I need to finish out pushing over just a few more stocks. So a video to come on that. But the same thing, guys, for the week of, or for this past week, week 4 of 2023, not a whole lot of dividend action. So we saw SPHD, a dividend for $14.51. And the guys, again, another sort of, I'm nitpicking, if you will, I like that Robinhood kind of tells me what's coming up on the horizon. So you guys can see, even though January has got a few more days in the month, I can expect to receive a dividend from Southwest. You can see here my SPY ETF. You can see CVS is going to be the first dividend of the month. So I don't know. I mean, I love M1. I just wish it did a better job at displaying upcoming dividends. It doesn't really do that. You guys will have to let me know in the comments if you guys feel the same. So let's go to my spreadsheet here, guys. And as you guys know, if you guys are investing, especially with dividend stocks, I think it's so important that you guys create your own spreadsheet. I'm using Excel. This is something that I was, very easy, very simple to throw together. I'm not a tables and pivot, I'm just a regular basic Excel user. So these are relatively easy to put together if you guys haven't thought about doing something like this, either in Google Sheets or Excel. And guys, right here, $547.81 for the year. I could not be more excited because January is obviously shaping up to be a very strong month for me. The big goal that I have for all of my dividends received in 2023, I obviously want to beat year to date, right? I want to beat what I earned, right, the previous January of 2022. And in a perfect world, I would have beat, the January in 2021. This is blank because, as you guys know, and if you didn't, I am a relatively newer investor. The first stock that I ever purchased was, in fact, in very early 2021. one. So there you have it, guys, $547. Let's give you the breakdown on this because, as you guys know, the majority of my holdings up until this month, I had everything in Robinhood, very little in M1. Now I have pushed over quite a few stocks, and I did make a video a while back. So if you guys haven't had a chance, take a look at that. I kind of just briefly break down all of the stocks that I transferred over. And so because that transfer was rather recently, you see the ratio here. Clearly, I am making, or I was making, more in monthly dividends when it comes to brokerages. Robinhood was the majority, M1 was the minority. Going forward, guys, February, I would say March for sure, you will see these numbers inverted. You will see the majority of my dividends coming from my M1 brokerage and the minority coming from Robinhood. And this was done so on purpose because, again, I want to reach that coveted goal of $15,000 in yearly dividend income. And I think because I pushed everything over to M1 and how you are able to set target percentages, that's going to help me get to that goal. So there you have it, guys, 4 dividends. And again, I think it's important to not just maintain your monthly stats, but also maintain your year-over-year stats. I promise you guys, when you're having a bad day like I had yesterday, looking at this is going to be like, all right, like look at the progress I've made. And yeah, I'm only contributing in whatever the amount is per week or per month or even per day. It's going to kind of, help you feel more satisfied about your progress. All right, so let's get into what happened this week on covered calls. And you guys know that I have been selling covered calls for not even a full year yet. Brad Finn, he's just the man, right? I always throw his name out. I'm a complete fanboy. He's actually commented on a few of my videos, and I'm so appreciative of him watching and him supporting. So Brad will also appreciate the sort of like the me keeping it 100 and me keeping it real. And I absolutely got smacked on Friday, and some of it was out of my control, some of it was stuff that I should have seen coming. So let's just get into what happened, and it really goes back to how the markets finished this week, right? We saw some fantastic gains in the overall market, especially for this past week. And again, that's a great thing if you're holding a stock. It's a great thing if you're a dividend investor. It's not a great thing if you're selling covered calls, because what you don't want to happen is you don't want the share price to shoot way beyond your strike price in a covered call transaction, because what happens is you run the risk of those shares being called away. And I've talked about this before, so do as I say, not as I do. But the first rule to selling covered calls is you should absolutely not sell below your cost basis. And what that means is we'll take a look at this Apple transaction right here. If I have 100 shares of Apple, and I was able to pick up 100 shares for $135 a share, right? That's my cost basis. And so, of course, in a perfect world, you are selling covered calls above that cost basis, which means if those shares, for whatever reason, get called away from me, at the very least, I can say I still made a profit. And then we get into Tesla, and that's where I absolutely got punched in my gut, kicked in my teeth, whatever you want to call it, because, guys, I own 300 shares of Tesla, and my cost basis is upwards of $250. Well, if you look at all of these covered calls that I'm selling, that's nowhere near my cost basis. In fact, it's like 40 to 50% below. And so what that means is if these shares get called away, I immediately incur a loss from the original price per share on those 100 shares. And that has been the real risk. So let's go ahead and scroll to Tesla, and we'll break down exactly what happened. And we'll just start with the week. Guys, Tesla this past week, by the way, which a lot of it to do was earnings. And I had expected Tesla to not meet or beat earnings. And of course, you guys know what happens, right? If a stock does well, it's going to probably see, it's going to shoot up in price. And if it doesn't do well, it's going to drop in price. And those, as a long-term growth investor, if you like a stock, you're going to be like, awesome, let me go ahead and buy this stock while it's cheap, and let me hold off if it's expensive. So I already own existing shares of Tesla. Let's go down to my cost basis so you guys can share my misery here. Here it is, guys. $277 a share is my cost basis. Not good. So what I've been able to do in the meantime, as I wait for the share price to go up, is I've been selling covered calls. Well, guys, take a look here at this week. Tesla, right? I mean, we started here on the 23rd. Tesla was 141.82. Matter of fact, a little bit lower actually. Tesla was like 138-ish. And then, of course, earnings were released. It did rather well. And so Tesla for the week shot up an unbelievable 30%. That's $43, which again, if you're a shareholder, that's fantastic. It also reiterates why implied volatility for Tesla is always going to be a factor when it comes to selling cash secured puts or covered calls. So if the current share price is 178.97, and I currently have, because everything you see here, guys, in white represents open positions, this right here is not a good thing, because right now I sold a covered call, which means I entered an agreement to sell 100 shares of Tesla at the strike price of 146.67. And as it stands, this was a roll that I have made because I have been trying to play catch up with the consistent increase in the Tesla share price. So guys, I had to make a decision, because even though I grossed nearly $2,900 in gross premium, my fear was, even though this thing expires in June, the person on the other end of this transaction is going to say, man, I've already made money on this transaction. Why wouldn't I call these shares away? And now I'm holding on to 100 shares. That person on the other end of my covered call contract scored those shares for 146.67. And if you look at the momentum of the Tesla share price, guys, I wouldn't be surprised if this continues to go back up to 200. So what do? Well, you've got a couple of options. You can roll that position, and when you roll the position, you hope to get a better strike price, but it obviously means you're going to choose a further out date. And the further underwater you are on that contract, right, the further out in time you're going to have to go. And that was a real problem. And I quickly realized, and guys, by the way, I'm not just upside down in one contract. All of these open contracts, all three of them, I am clearly underwater. I run the risk of these 300 shares being called away. The biggest concern I have is this one, right? Because this has the lowest strike price among the three, and this thing expires in June. So yeah, I could roll it out, and I did try to explore that, where I rolled it out to December. And guys, even then, I wasn't going to be able to make, if you will, net positive premium. And of course, my goal has always been, when I sell covered calls and I have to roll, right, I don't want to take a loss on that transaction. Well, guys, I had to do that. And this is the real truth when it comes to selling covered calls. The minute you sell a covered call below your cost basis, I promise you guys, there will be additional stress in your life. I don't want to say you'll lose sleep over it, but you will certainly wake up and be like, holy smokes, let me check these covered calls that I've sold below my cost basis. Because again, you are immediately going to incur a loss for that overall transaction. And that is the stress that I felt on Friday. And I knew I had to do something. So let's go ahead and break down. We'll go ahead and take a look here at my phone. And I'll break it down exactly what I did. So if we go to Tesla, you guys can see here, it's the same view, but I like the transactional view on the cell phone. And we'll go back here to the spreadsheet here. So this was the one that I was worried about here, which is this covered call for 146.67. Now I received gross premium of $2,800, but I am fearful that these shares are going to get called away way before June. And that is something you also have to realize, right? That person has every right to call away those shares. I don't have to wait to the actual end of that contract. They only have to wait for the strike price to be exceeded, and that clearly has happened given that Tesla's current share price is 178.97. So guys, what did I have to do? And if we go down to the transactional data, you guys are going to see in the history here, if I can find it, guys, I had to buy to close this contract. And if you can see right here, guys, it cost me $4,780. Notice I'm whispering because my wife, who does not watch my YouTube channel, she's downstairs right now while I'm quote unquote, putting together some content here in the studio, as I call it. Guys, this was, I mean, it's significant, right? I'm going to keep it real. It absolutely is, right? What I described as being a punch in the gut. But the reality of it is, if I did not buy to close this contract, the loss would have been way more than $4,700. So keeping in transparency, let's go ahead and enter this information here, guys. And you guys know I keep these spreadsheets. So essentially, I bought to close this contract. So I need to go back to my spreadsheet and I need to, put in the information of 4780. And so if we go back to my spreadsheet, you guys are going to see, I'm going to do this live. I have to put in exactly, right, what I paid to close this out. And you guys will see I immediately incur clearly an overall loss for the month of January. I was doing so good, if you will, right? Nearly 7,000 in covered call income. And that's why I tell you guys it's so important to be mindful of net premium and gross premium, because something could happen, and it exactly did. So I'm going to go ahead and label this roll closed for loss. And this is also important if you guys are going to sell covered calls. I want to be able to keep track if the transaction was profitable, if it expired worthless, if I closed early for a profit. So I will always give it a proper outcome. But again, you guys can see here, I mean, I was doing so good. So let's go ahead and fill in some more tabs. So year to date, so January, I've sold 100 covered calls. If I go to my yearly option, we go ahead and update this. So there's 100 covered calls. And now I need to go ahead and fill in the current gross premium, which is $2,712. So I went from 7,000 to 20,000, or sorry, 2012, right? Did I get that number right? 2000. I'm sorry, 2717. 2717. And so you guys can see here for 2023, between covered calls and cash secured puts, quote unquote, I'm only at $4,300. I am normally an optimistic person, guys. I'm going to keep that optimism. And this is not the first time that I've had to roll for a loss. That's also important to note. I still have the entire year in front of me. And guys, truth be told, if we go back and we look at Tesla, you might say, Wayne, you're probably going to take a break, right, from selling covered calls on Tesla. No, actually I didn't, right? I mean, it sucks that the share price jumped up so fast, but that is what happens when you're selling covered calls, especially with stocks that have very elevated implied volatility. And so what did I do, guys? I sold this at a loss, I bought this at a loss, and I immediately opened up a new position, and I actually was able to get a better strike price. So now, if you look at this, I was able to sell a covered call for a strike price of $210. Do I think that Tesla will go to 210 by next week? I don't, but I've been wrong before, and clearly, guys, I had a misstep this past week. But it goes back to, okay, yeah, I incurred a loss of nearly $5,000. Let's start selling covered calls, or let's continue to sell covered calls. Let's choose more conservative strike prices, especially if we see the momentum of what Tesla is doing. And in doing so, guys, I was still able to bring in $196. So let's go ahead and real quickly, in the interest of time, I'm going to go ahead and just put in this information here. So I sold a covered call for Tesla, and the strike price is 210. The expiration is going to be next week. And of course, I've got the worst memory ever here, so I apologize as you guys are watching me. Again, I made 900. Oh, actually, it's not for the 10th, it's for the 3rd. So I made $196. You would think my short-term memory would be a little bit better on that. So this is the open premium, guys, $196. Let's go ahead and fix this date here. And again, this is actively open. If I now resort this A to Z, And I want to just look at how much I've made or how much total I've lost on Tesla. You can see here, guys, I have sold quite a few covered calls in the month of January. I'm not going to go ahead and include this leaps. That is another video altogether. Difficult for you to see, but on the bottom right-hand pane, you can see I have sold a total of 18 covered calls. I am currently at a loss of $3,100. So that's going to be my new goal moving forward. I want to continuously generate additional covered call premium selling Tesla covered calls. And I want to crawl out of this nearly $3,000 hole. I think I can get there. And you guys can see just by selling this covered call, again, I'm up to what now? $2,900. So we'll go ahead and fill this in, right? So $2,908. It does bring this up. Obviously now I've sold a total of 101 contracts. And again, guys, I'm not the best when it comes to Excel, but I have my own way of keeping track. You guys are fantastic as always. Guys, how cool is this? We just hit 100 total subscribers. I am so appreciative. Hopefully you guys are enjoying the content. This week, I am putting the finishing touches on a video that I promised last week, and that is my favorite monthly paying dividend stocks. I hope that it drops in the next few hours or so. But thanks for letting me chronicle my journey. And you guys can see not everything is going to be, rainbows and butterflies and, me swimming in piles of cash. But I do keep the perspective like, okay, you had a bad week when it comes to selling covered calls, but look at what a great week you had in earned dividend. What a great week you had on unrealized gains regarding, the rally that we've seen in the past few weeks. And hopefully you guys are experiencing all those highs, but you're also not getting too down on yourself when you see those lows. And so we'll see you guys in the next one. Thank you.